For those that do not know who I am Lisa Reynolds, and welcome to another Manifest Mondays. Today, we're diving into mastering financial planning and management. Managing your finances is key to both personal success and growing your business. Whether you're just starting out or looking to scale up, understanding how to control your money is a game changer, people. You will learn and understand the financial side of your business, from setting up a budget to planning for long-term success. Managing money properly is the key to keeping your business afloat and growing. So let's dive right in. Budgeting helps you map out where your money is going and how much you expect to earn over time. It's like a roadmap for your finances so you don't get caught off guard by unexpected costs. Budgeting also helps you avoid overspending. It helps build savings and plan for future expenses. You start by listing all of your expected income and expenses. Think of things like product cost, marketing, rent, and utilities, and shipping. Your startup budget is your first financial plan, and it also includes initial costs like licenses, equipment, and inventory. Financial forecasting is like predicting the weather for your business. You look at trends and estimate how much money you'll make and spend over time. This helps you plan for growth or new investments. For me, keeping an electronic budget for over 5 years allowed me to see my finances from both the past and the future. I could see what I could and couldn't afford, and the goals that I once seemed impossible became reachable. By laying out everything in front of me, I could move things around and make smarter decisions for my financial future. I started my budget by first listing fixed costs. These are costs that stay the same each month, like rent or salaries. Then I listed variable costs. These change depending on sales, like materials and shipping. Then I estimated my income. How many sales or clients do I expect to based on my market research, right? And finally, I created financial projections. I use my income and expense estimates to predict my profit each month. In your budget, you also need to include a cost to set aside for emergency funds. Without an emergency fund, your business could quickly run into a cash flow problem. When unexpected expenses arise, you might have to take out a loan or use credit, which adds to your debt. But with an emergency fund, you can cover those costs without putting your business in a financial bind. It gives you peace of mind, and it helps avoid making quick decisions that could hurt your business in the long run. Now, I'm sure you all are saying, how much should I have saved? Well, the rule of thumb is 3 to 6 months worth of operating expenses. This includes rent, utilities, payroll, and any other essential overhead costs. If that seems like a lot, start small. Focus on saving enough to cover 1 month's expense. Then work your way up from there. The key is to get started and to build your fund over time. So, how do you save for an emergency fund, you say? Well, here are some strategies that can help you. First, you can automate your savings. Set up regular transfers from your business checking account to your savings account, and make this dedicated for emergency funds only. Even small amounts add up over time, right? So next, cut non-essential business costs. Take a look at your budget and see if there are any areas where you can reduce spending, like subscriptions or unnecessary purchases. Every bit you save can go towards your emergency fund. Finally, the biggest one is to keep your personal finances separated from your business. This is key, and it is important to make sure that your business emergency fund is used for business expenses only. Now, building a business emergency fund takes time, but it is one of the smartest moves that you can make to protect your business. By having that cushion in place, you can handle unexpected challenges without relying on debt, and you will be setting your business up for long-term financial stability, people. So here's an example of predicting your first year income. Let's say you sell handmade jewelry. Your budget would include materials, marketing, website fees, and shipping. Now, your financial forecast will estimate how many sales you expect based on trends. Your startup budget is everything you need to launch your business: the equipment, the inventory, the marketing, and the legal fees. It's different from a regular budget because it focuses on those initial costs, okay? Now, financial projections will show how much your business will make over time. These cover the first year and include estimated sales, expenses, and profits. Now, when it comes to growing your business, you may need some outside funding, so let's look at some options. Now, research loans or credit options. Borrow money with interest, but only if you have a solid plan. Now, grants are free money that doesn't have to be repaid, so look for grants for entrepreneurs like yourself. Now, investors are people who invest in your business in exchange for a share of your profits. Approach investors again with a solid business plan and try crowdfunding for community support. So now that we've gotten that out the way, let's move on to accounting basics. Accounting helps you keep track of your business finance, which is critical for growth and taxes. Record every transaction, every dollar in, every dollar out. Keep all your receipts relevant to your business, your travel, gas, inventory, and anything else related to your business so that tax time is less stressful and you can maximize your deductions. Me personally, I keep all my receipts in a Ziploc bag. I would then put them to an electronic spreadsheet so that I have actual numbers when it's income tax time, okay? So make sure you keep track of all income and expenses. You can use a regular spreadsheet, as I mentioned, or software like QuickBooks. Now, every business needs business credit, and we're going to dive into building business credit by talking about the DUNS number. The Dun and Bradstreet number, also DUNS, D-U-N-S, is a unique 9-digit identifier for businesses that are associated with a business's live business identity, which may help evaluate potential partners, seek new contracts, apply for loans, and much more. This number helps build your business credit, making it easier to get loans and win contracts. It's like the Social Security number for your business and helps you look credible to lenders and suppliers. It helps lenders and partners see your business credit history. This number, again, helps you get funding and win contracts and buy inventory on credit. It makes your business look much more legitimate. When applying for secure loans, banks may check your DUNS number to see if your business has a good business score. When it comes to winning government contracts, many government agencies require a DUNS number before even doing business with you. And when building vendor relationships, some vendors allow you to buy now and pay later based on your DUNS number, not an EIN, but your DUNS number. And of course, I will have a step-by-step video on how to have all the required steps needed in order to apply for your DUNS number. So let's talk about something crucial for every business owner, and that is managing that business debt, people. First off, not all debt is bad for your business. Sometimes you may need to take on debt to expand operations, purchase equipment, or invest in growth. By mismanaging that debt, it can lead to a cycle of high interest payments, which can hurt your cash flow and add unnecessary stress to your business. So here's how to manage business debt effectively. List all your debt. List all the business debt. Know exactly what your business owes. List them by balance, interest rate, and due dates. This gives you clarity on what needs your attention, right? Immediate attention. Tackle high interest debt rate first. Just like in personal finance, business debt can be managed using the snowball or avalanche method. I personally recommend the avalanche method for your businesses, where you focus on paying down high interest debt first to save interest costs and improve cash flow. Avoid accumulating new debt. This is essential for long-term success. Only take on new debt if it is absolutely necessary and it aligns with your business finance strategy. Ensure you have a solid repayment plan before borrowing more. Now, when it comes to business credit cards, they can be a useful tool for managing short-term expenses, but be cautious. Pay that balance off every month to avoid interest altogether, which can eat into your profits, okay? So now let's shift into focus on financial discipline and long-term planning for your business. Every successful business relies on a strong financial foundation. Staying disciplined with your finances is key to growing and scaling your business. So here are some practical tips. Consistency is crucial, people. Make sure you stick to your business's financial plan. Track income and expenses regularly and keep a close eye on your cash flow. Make adjustments when needed, especially as market conditions change. Set long-term financial goals for your business, whether it's saving for future expansion, building up working capital, or investing in new technology. Having clear business goals keep you and your team focused on the bigger picture. Adopt a strategic money mindset. Look at your finances as an ongoing journey of building wealth and stability for your business. Keep your eyes on long-term sustainability. And remember that every business financial win gets you closer to your big goals. Conclusion is that financial business planning is just not about numbers. It's about empowerment, people. With a clear budget, financial projections, and smart funding, you'll have the tools you need to make confident decisions and set up your business for success. And remember, like I did with my 5-year budget, it's all about seeing the full picture so you can take control of your future. So to wrap things up, let's quickly review the business financial strategies we covered today. First, we discussed the importance of creating a business budget and how it helps you manage operations smoothly. We talked about building a business emergency fund to protect against unforeseen costs. I gave you practical tips on managing business debt and how to use business credit responsibly. Lastly, we talked about staying disciplined with your business finances and focusing on long-term goals. I encourage you to take these strategies and start applying them to your business today, because financial planning and management are all about knowing where your money is going and making smart decisions. Whether you're budgeting, forecasting future profits, or securing funding, having a solid financial plan helps ensure your business will be successful in the long term. By mastering these steps, you'll be able to keep your business financially and sustainable. You've got this. Share in the comments which area of your business finances you're focusing on, and be sure to tune in to next week for Manifest Monday, where we'll explore more ways to build a financial, healthy, and sustainable business. Stay blessed and highly favored. Peace. I'm out. Please subscribe, like, and hit that notification bell for more videos like this.